Aditya Ultra Steel, TB Icon. If you've been tracking the SME markets and the IPOs, chances are that you've heard of these companies. Why? Because their subscription numbers have been through the roof. And I have with me one person or one of the people who has been responsible behind this, the investment banker, because the investment banker does have a large role to play behind these SME companies and their successful listing. What is causing SMEs to hit the market? As investors, what should you be aware of? What are the red flags? I have with me Aayush Agrawal. He is the Assistant Vice President for Investment Banking with Swastika. Ayush, it's lovely having you with us today. And let's start off first with the reason behind all these SMEs really wanting to hit the primary markets to raise money. What do you think has caused this? Because while these two platforms, the NSE Emerge and the BSE SME, have been around for a while, it's in these last 2 odd years that there's been a flurry of activity.
I think that's a very good question from your end. I think this platform by NSE and BSE was started back in 2012, wherein they've provided small size companies who don't have access to easy equity to get listed on these exchanges, wherein they have a very easy listing criteria for them, majorly being profitable. And then other than that debt, they have an option to raise equity, because usually private equity firms work out in higher ticket size investments for larger companies. For startups, there's venture capitals, angel investors. But for these traditional manufacturing, trading, companies who've been doing business for 20-30 years in the past, maybe 10-20 years, and don't have easy access to equity, more of a traditional business, there was no platform such that, which was started by the exchanges, which now has peaked in the last recent years, because multiple companies have grown in the business, because their valuation upside, their revenue profitability can grow multifold when they have easy access to capital. Because debt की एक limitation होती है which cannot be met all the time, and a company cannot get debt very easily from the banks and BFCs, which is at a very high rate. So this easy access to equity has helped these companies grow. Moreover, being listed, these companies get recognition worldwide if they're doing an export-oriented business. They have easy client trust basically on them, and they're able to grow their business multifold by doing that. And moreover, once you get listed, your entire working style changes. You become more regulatory focused, compliance focused. You do the business on behalf of the stakeholders, shareholders. You have a responsibility on your hand. So your perception and style of working changes, which helps you grow your business a lot in the future.
Now, I see that you've worked with, I think, more than 30 companies. Correct me if I'm wrong. It's been around 30 companies that you have worked with and helped them go to the exchanges. You've got many years of experience. So tell us, what is it that you have observed in terms of the attitude of these companies earlier when they used to hit the exchanges versus now? Do you think that companies today are better prepared to, face that public scrutiny that comes along with listing?
Yes. Earlier, I think back in 2016, 2017, a lot of SME companies had come in, which were not that compliant per se. There was a boom in the market, but then the companies were not that compliant, and they didn't have that understanding of what being a listed company is and following the compliances, which led to the slowdown maybe for a couple of years. And then after that, the market again picked up with a more robust mechanism for compliance for these companies. Usually what happens is these smaller companies initially are not very compliant per se, because they're doing a business, it's a family oriented business. They don't have a lot of, opportunity initially. They're not exposed a lot to good consultants across the country. What these SME IPOs help them is, make them very process oriented, compliant forward, focusing on showing maximum profitability in the books, keeping them company ahead. So earlier these challenges were there, which nowadays I think are being met out by proper consultancy and knowledge to these companies, and even promoters. I think after the next generation, since a lot of companies next generation have kicked in into the business, they've done their courses from top B schools, and they understand what how financials, compliances, growth, and which helps these companies grow.
Now, of course, before you list, there are certain things that have to be done. You have to get your house in order. And I see that one of the services you offer is something called as a pre-IPO consultancy. Tell us what goes behind that. How do you essentially prepare the company, before they list themselves? What all does it entail, a pre-IPO consultancy?
Pre-IPO consultancy, in the sense, helps these companies get ready for getting listed. Help them make the processes a company needs, a listed company needs, improve their financials, help them in capital restructuring. Wherein, a lot of companies, maybe they're having two, three different businesses in two, three different companies. So we consolidate those companies together, make a holding subsystem structure, improve their business practices, see where the money, कॉस्ट इज लैकिंग या फिर कॉस्ट कहीं ना कहीं पे गेटिंग वीक या फिर इट्स गेटिंग एक्सपांडेड सो वो रिड्यूस करते हैं improve their profitability. Along with that, improve their compliances, help them, improve their board, basically hire a good board of directors who can keep a check on the promoters, their businesses. Even they have to then report to the board. So it puts a pressure on these promoters as well. Then have a full-time company secretary, financial person, help them get hired, these person. Because at Swastika, we have a full-time HR consultancy service as well. So we help them hire good team members as well. So this overall basically help these get companies, in terms of a pre-IPO preparedness for the listing.
Since you do this consultancy, I'm sure over the years you may have advised some companies that, hey, listen, hold on, you still need a lot more work, before you go to the market. So if you could share some of those signs, which you felt came out when you were working with a company, and you sort of warned them that, hey, listen, maybe you're going on the buses a bit too early. So if you could share some of those signs with us.
Technically, SME platform is made such that, smaller companies, even very small companies can get listed. Such as the idea for this platform that small to small company can get listed. There is no minimum criteria as to the IPO size. We have seen cases where the IPO has been for 3 to 4 crores, 5 crores, 10 crores, etc. So in terms of, but size wise, it doesn't matter that the company is early. The company should have a proper process to maintain their business compliances after getting listed. They should have a mentality that, once they're getting listed, they have taken money from equity shareholders outside their company, which are not promoters. And then they have to fulfill that responsibility towards them. So once the company, understand that concept and uski taraf they start focusing. So I think everything goes for the benefit of the all stakeholders. Otherwise, वही होता है कि if the promoter doesn't have that intent to grow that businesses, and कई बार कि you've taken the money, उससे आपने कहीं non growth related expenditure तो नहीं कर लिए, you've taken your personal cars, आपने कहीं दूसरे expenditure कर दिए हैं, you use their money somewhere else. So that doesn't go good with the investors and the future of the company. So that kind of maturity should be there with the promoters.
Ayush, a follow-up question. If a company, जैसे आपने कहा 4, 5, 6 करोड़ रेस कर रही है, don't you think the compliance cost of listing is very high? Because as an investor, then even I will think कि ये company सिर्फ इतना पैसा रेस कर रही है, then is it even worth listing? Because the amount of compliances, because SEBI comes in, all these regulations come in. Don't you think that the compliance costs are way too high then?
Absolutely. So in terms of SME, I think the compliance cost per se is not that much. In terms of if you see the overall compliance cost, including a basic, documentation fees, exchange related fees and intermediary fees, will be somewhere to the range of 50 lakh rupees. That becomes the compliance. Then the marketing part counts, which can definitely vary from case to case basis. So if you're bringing an IPO to the tune of 5, 6 crore, I think compliance cost definitely as a percentage becomes a larger amount. But then as compared to mainboard IPOs or larger other IPOs, this compliance cost is usually less.
I'm seeing some of the companies you've worked with and superb subscription numbers. I think one of the success models or factors to gauge whether an IPO has been successful or not is firstly कि उनका subscription कितना हुआ है, and secondly maybe the listing day gains. And most of your companies have done very well on listing day. तो आपके experience के हिसाब से what are those, what goes behind making a company's IPO go successful?
when we're doing a pre-IPO preparedness for these companies that helps them, improve their compliances, their team for the future, get ready for the IPO, improve their capital structure. Definitely that goes, the work that we do behind definitely helps these companies get successful, later stage after the IPO as well. And in terms of during the IPO, what we do is basically if the company is having a very good financial growth, if it's brought at a very right valuation, which is a win-win for the company as well as the investors, then the investors feel that they have something there to grow in the business. So definitely they have an interest, and once that investor interest develops, so the IPOs get subscribed multiple times. Apart from that, I think one of the companies that we did was TBI Con, where we did a pre-IPO round, and then we brought in Ashish Kacholia, who's a very good ace investor. So when people like these come on board of these companies in pre-IPO stage, that creates a very fancy in the market. It definitely gives the company a boost. It develops a trust between the investors that there is a growth potential in the company, which helps these companies get subscribed multiple times and derive a hefty listing gain.
Now, as a merchant banker, there's this exercise of course, pre-IPO consultancy, जो आप वैसे भी conduct करते हैं. But in many ways, you may also become the face of the company, especially when they're doing roadshows, etc. for the for the IPO. So, as a merchant banker, if you could tell us, apart from pre-IPO, what are the other roles you take on to try and ensure that this company's IPO goes through and it's successful?
In terms of investor awareness, investor relations, we help these companies a lot when the company is fundamentally good and has a very good growth potential. A lot of good investors in the market and these marquee names are always interested in investing because they keep scouting for these companies which they can help technically more than the money. They can support these companies basically to grow. So we're very well connected to these kind of investors. So it acts as a win-win for both. Matlab, for the investor segment, they create their money, they create their value, and even the companies because they benefit out of this. So apart from just the investor segment, we do the entire due diligence for the companies, help in their valuation, compliances aspect. And as a merchant banker, you have to definitely underwrite the issue and market it from end to end. So what goes is the right PR activities that have to be done, the advertisements, the marketing. A lot of times we do investor meetings as well to, support these companies during the IPO phase.
Now, I know you spoke about this briefly in one of your previous answers, but from a morale perspective, I want to know that for the upper management, for the employees, how does listing, change their morale?
Once a company gets listed, there is a massive shift in the thought process of the promoters and the companies, right? When you are an unlisted small company, you're actually just doing internal work. You're not basically answerable to anyone. For management, once the company gets listed, you have to attend quarterly earnings calls or half yearly earnings call. You have to submit your financials every half year. Then you create a board of directors wherein you hire independent directors from outside. So even the top management have to answer to them. So then they work in a very professional manner to maybe help the company grow. In terms of employees, employees, they have an option of employee stock option plans, ESOP schemes, etc., wherein they get some equity stake in the company. So once they get some equity stake in the company, definitely they are working more for the valuation growth of the company and they feel that they're part of the company's growth. So their productivity by default increases. So, and then you start comparing yourself to the larger listed companies on Mainboard or other platforms, and you try to achieve that level of efficiency and growth. So overall, that helps boost the morale and targets of the company entirely.
Now, you've always sat on the company's side of the table, but I want you to move over to the investor's side of the table because investors have been putting in a lot of money behind these SMEs. What, according to you, is the reason behind this?
In terms of the subscription numbers, what happens is usually the India ka as a investor base is huge. And in terms of the size of the IPOs, these are very small ticket size IPOs as compared to, 10, 20, 30, 40 crore IPOs. So getting a multiple X subscription becomes easy because the market is so huge. In terms of main board, the IPO size itself is basically somewhere in 200, 300, 500 crore as a normal range for IPO. So there, maybe if an IPO of 55, 20 crore is there in SME, So it will get 10x, yeah, 20x more subscription to main board because of the size being smaller. Secondly, SME has given very good returns to investors in the past few years because when you're a small company, to make that jump in revenue and profit is easy once you have that capital you need to boost your business. Because these are companies in a very good growth stage. Usually, main board pay companies become more of a value stage companies where if they have reached their accelerated growth and they will grow at a normal pace nowadays. In SME, the companies grow at an accelerated pace, wherein 30, 40, 50% growth rate is normal for these companies. And hence that return is higher. So if we see in FY23, usually I think the SME platform witnessed 1.7x higher returns than main board IPOs. The likes of great QIB investors, anchor investors have come in and started, investing in SME that has led to a drastic increase in retail investors.
So also the kind of investors who are putting money, I mean, usually it's your HNIs or your QIBs. Now it's even retail investors. So the mix is also changing.
Absolutely. Retail bhi kafi aa gaya, and moreover, after the introduction of ASBA, wherein, the amount is blocked in your own account and it's not deducted and transferred to someone else's account until and unless you have the subscription. So, and moreover, that blocking amount of time period has reduced to 3 days now from 6 days. So investors ki liquidity zyada time ke liye, is not impacted when they're investing in such companies. So definitely they don't mind going to try to just, invest in SME IPOs or mainboard IPOs because money is just getting blocked unka and it gets unblocked in 3 days. So those types of when the liquidity increases, so investors feel that they can invest more in SME companies.
That's a great point, actually. Convenience is something that's just pulling all retail investors, towards finding all those different investment avenues, and SMEs is one of them. Ayush, it was lovely chatting. Thank you so much for joining us today on Small Cap Spotlight.